This is going to be one of the most important videos I'm ever going to make on the topic of becoming rich, and this was the most important learning curve I ever came across aside from assets and liabilities. I'm sure we've all heard the rich dad, poor dad story where assets are things like your properties, things that go up in value, whereas liabilities are the things that go down in value. But where we actually get rich is in understanding how equity works. I'm going to break all of this down in this video and also update my $150,000 dividend stock portfolio where I had some juicy dripping dividends come in. So let's hop right into this.
Drop it.
Welcome back, my passive income investors. To the biggest mistake I've ever made in my life, and that was becoming a full-time illusionist magician. It is my passion. It is my career. The problem is I don't own any equity value in this business. So before I break down my $150,000 dividend stock portfolio, I'm going to share with you the most important wealth building tool you're ever going to learn, because I'm sure you're aware of something called an asset versus a liability if you're already watching this video, but what you probably don't understand is how equity works. So what is equity? Well, let's presume you show up to your 9-to-5 job and you're collecting all that capital and you decide to buy your favorite stock. Well, the day you buy that stock, you now have an equity stake in that business. So if the assets grow over time, your equity value gets bigger as well. In my personal career as a magician, I am a personality type. People hire me for my personality. Basically means that if I stop doing this as a career, well, everything bottoms out and I completely lose that cash flow. It isn't what we call a brick business. It isn't something that I could just hand off to somebody else to take over. Now, if you work at your 9-to-5 job, you're actually building a large equity stake in somebody else's business, clearly worth more than paying you your current salary. So let me give you a much simpler example of how you can build equity in a simple, what we call brick business. And that would be, say, starting something like a window washing or even walking dogs while you're paying your education. You might just think you're making an extra $500 to $1,000 a month walking these dogs or cleaning these windows that is going to help you get through your schooling, but you don't realize that there's somebody else out there that probably wants the work you put into that business, because chances are you built up clients, you spent some time putting this whole thing together, figuring out how much you can make, and now you're building up those cash flows. Somebody else out there would want that business, which gives you an underlying value for all of that work that you put into it. This is a very hard thing to gauge and is variable on many factors, but I want to give you a fun little Warren Buffett quote that said, you want to own a business that at some point an idiot could run, because sooner or later an idiot is going to be running it. It is very hard to just sit down and figure out what your business is worth compared to other businesses in its sector, because every sector gets valued quite differently, and clearly companies like Apple and tech businesses get valued at much higher premiums. This is where PE ratios would come into play, which essentially stands for price to earnings. How much does that company earn in a year versus what you're paying for that multiple? For instance, take Apple, for example, that trades at a PE of 25. That means if you buy it today, you're going to have to wait 25 years for Apple to catch up to for what you just paid for. But when companies are growing, that PE can go down over time, which means you might actually be getting a deal on it. And this becomes very challenging when you're looking at certain industries. For instance, let's look at REITs. If you take something like an O Realty Income, which has been a very fast growing real estate company, it trades at a PE of 62 times its earnings, which is pretty absurd if you compare it to another unattractive REIT, something like a GEO Group, which is my prison stock. It trades at a PE of 12. And that usually means that it's not growing as fast, or there's something more unappealing to it. And you're going to have to do your deep dive homework to figure out where that value lies. But in your company outside of the stock market, very easy to look at PEs on publicly traded companies. But in your own personal business, you're going to have to get somebody to value it, or you're going to have to be very knowledgeable in your own personal space to figure out what that value is and where that PE ratio lies on your personal business. Now, how awesome would it be for your own personal company to be trading at like a 20 times its earnings? That means if you were making $10,000 a year in net income, your business is worth almost $200,000. I want you to keep that in mind, though it is extremely unlikely, as most personal businesses trade usually between 3 and 5 times its earnings. You don't need to understand it to that extent. You could start any business and start comparing it to other businesses around you to give yourself a very good understanding of what it might be worth. And the reason understanding building brick businesses has become the biggest life-changing thing for me is every time I do something now outside of my personal career, I look at it as how can I manage it in a way that I could hand it off to somebody else to own. So at some point when I'm deciding to stop doing it as a job, I can hand it over and get a massive dump load of cash capital. This is how Kevin O'Leary got rich. This is how Mark Cuban got rich. This is in fact how most billionaires became rich. Heck, even if you watch big realtors today, like your favorite Grant Cardone videos, even he is trying to build equity stake in his business. So at one day, he even said he can just sell it to Wall Street. And this is the biggest hindering factor I find in the way most people operate businesses, is they don't realize that they could structure it in a way that could give it 10 times its current value. So let's presume the business makes $500 a month, but let's presume it's in a very stable growing business like your dog walking business. That could give it maybe a 3, 5, heck, even a 10x value. So if it makes $6,000 a year, it might be worth $60,000 depending on how concrete and stable that income is. You will have to talk to a professional business advisor. There are people out there that basically can show you how to value your business. Mind you, they usually charge for these services. It's something that I'm going to be sharing with you a lot more throughout this year as I personally try and look to buy online digital assets. I'm going to give you guys complete transparency on all of that. So consider slapping a like and subscribing for those future updates. But in light of this, I'm going to head on over to my own personal six-figure stock portfolio where I hold most of my equity value and break down for you what the heck is just going on this week with this portfolio that has been on the largest run I have ever experienced. I am up about $20,000 since the beginning of the year. I have never seen my portfolio grow at this rate, so it's nice to see the compounding effect taking place. But let's go check this out. So before I head on over into the individual accounts to see where most of my equity has been growing, I think it's important to check out those dividends to see what I have received for this month, because it has been quite staggering overall. As we can see, Apple has paid me out $26 today in dividends. I've divided this up between US and Canadian income because I am a Canadian citizen, so at some point it all gets converted back. But in the meantime, I keep things divided in different accounts. But we can see the biggest value I had was liquidating my Tesla shares. I sold 9 shares, or about half my position, giving me $6,791, which I redispersed into Facebook, as many of you know. And British American Tobacco was the most recent payout amongst my accounts, giving me $104. And we can see Ryokan dripping a little bit of CAD, and we still got a few more payments coming in that I can't wait to get them juicy drips. But moving into the actual portfolios, guys, maybe we'll start with the RRSP before we move into the TFSA, because the RRSP has seen the most capital growth, now being worth $31,815 bloody dollars. Considering this account was only worth $19,000 when I started it, I haven't added a dime since, and my goodness, has this thing been growing, thanks to Tesla, and thanks to Johnson & Johnson, and heck, even thanks to the new position, Facebook, in which I just added. I am absolutely shocked that Tesla hasn't had a bigger pullback, and it is still holding in to some pretty extreme highs here. I'm not complaining, but it is something that I'm expecting some more further volatility down the road. Moving into my TFSA, the biggest movers obviously have been Apple, Microsoft. These companies have been on a tear lately, and I'm going to make a video tomorrow on an investment strategy that I think is going to outperform any, including my own investment strategy, based off a couple of these companies and specifically some reasons why. As many of you know, my TFSA is that juicy tax-free dividend income that I'm constantly reinvesting, and as some more dividends come in, I'm going to either redisperse it into some more of my REITs like Ryokan or even GEO Group, which I briefly mentioned yesterday. And moving into the other account where I'm heavily trying to be focused this year is my Royal Bank account, where I currently started buying Wells Fargo. I got some British American Tobacco payments as well. I'm going to continue to try and add some money to this account every single month, and Wells Fargo is probably where I'm going to be putting it to constantly increase my dividend income. But in the near term, guys, like I mentioned, I am constantly analyzing equity in businesses now, along with businesses I plan on starting, and in an attempt to constantly be building businesses that have equity value outside of my stock portfolio. Obviously, my portfolio tracker that Matt Money built here, this is an incredible tracker that I've personally been using to bring all 3 or 4 of my portfolios into one place, which you guys can go check out at thechartmaster.com, offering that Valentine for 10% off. So go check that out if you guys want to track your portfolio the same way myself and Matt and hundreds of other awesome investors out there do. But what I'm going to continue doing is looking to purchase another online asset. I want to continue building my space in the online business realm. So you guys know I've been messing around on Empire Flippers. I keep mentioning that I'm not allowed to talk about what I've been looking at in the business deals I've been doing here until they've actually followed through. So I can't talk too heavily on this, but I am constantly looking to not only build, but buy actual online assets or brick businesses that I can add value to and expand over time to hopefully build equity in other businesses, not just in the stock market, because you can get real wealthy starting a business from nothing. It's a lot of work and it's not easy, and there's a chance that it all could fail. But heck, if If you want to get rich, it's just the stomach that you're going to have to get through this. I really hope you guys enjoyed this video overall. I put a lot into this, so I do hope that you do subscribe and continue to follow this, because man, I am throwing out some real value for you guys here, and I really look forward to updating you on what I do with online businesses, what my stock portfolio does, because I mean, if we head into a recession, my few holdings could get impacted majorly. And if you guys do not have a Valentine's tomorrow, consider checking out the video that I'm going to be releasing on what I think is the highest performing strategy for investing that I don't even follow, but I've recently stumbled into this with a lot of interesting knowledge. So stick around for that, but stay cool, stay awesome. One heck of a video, guys, and I look forward to chatting to you real soon.